All right, welcome to a deep dive. You've shared some really interesting source material with us today.
Yeah, excerpts from an article, Nvidia versus Palantir, an AI stock showdown.
Exactly. So our mission here is to unpack what this specific material is telling us about these two AI giants.
And maybe more importantly, how the source presents Wall Street's take on them.
Right. And the article jumps right in, saying both Nvidia and Palantir have been, well, huge winners lately.
Seriously strong performers, outpacing the big indexes, even like the Dow and S&P 500 this year, according to the text.
And the source ties that directly to their roles in the, booming AI market.
Makes sense. But here's the interesting bit the article sets up.
The tension.
Yeah, the tension. Both are high-growth AI plays, sure, but the source says Wall Street, or at least the analysts it looked at, heavily favors buying just one right now.
And those 12-month price forecasts mentioned are worlds apart, apparently.
It's quite a contrast, and it's worth remembering, as the article points out, these are fundamentally different businesses we're talking about here.
How so?
Well, Nvidia is the hardware foundation, right? The chips.
The GPUs everyone talks about.
Exactly. While Palantir is on the software side. Data analysis, making AI useful from data.
So very different pieces of the same AI puzzle.
Precisely. Both crucial, but different playing fields. And just to be clear, we're sticking strictly to what's in this source material you sent over.
Got it. Okay, let's start with Nvidia then. The source calls them the world's AI chip leader, known for those high-performance GPUs.
Uh-huh. And the article addresses the cost thing up front. Says Nvidia chips are pricier, acknowledges that.
But
it presents Nvidia's argument, the efficiency gains, the performance.
Yeah.
It means lower total cost over time for the customer. That's the claim cited.
And it seems like that's landing because the source talks about overwhelming demand.
Overwhelming is the word used, yeah. It specifically mentions the latest architecture, Blackwell.
Blackwell, right.
Demand apparently outstrips supply right at launch, and it even gives a number. $11 billion in revenue for Blackwell chips in just their first quarter.
Wow, $11 billion first quarter. That's huge.
It's significant. And the source notes NVIDIA's promising annual updates to keep that momentum going, new chips every year.
So what about competition? Does the source touch on that for Nvidia?
It does. It mentions rivals like AMD, and even the fact that some big customers are trying to build their own AI chips.
Okay, so potential threats.
Potential threats, yes. But the article's conclusion, at least in this section, is that the overall AI market is just growing so fast.
There's enough room.
Yeah, enough room for NVIDIA to stay on top and for others to succeed too. That's the perspective presented.
Interesting. Okay, the source also provides some key financial data points for Nvidia.
Right, the snapshot figures.
Market cap listed at $3.5 trillion, which is just massive.
Mind-boggling number.
And a gross margin of 70.11%.
Mm-hmm.
Dividend yield is tiny, 0.03%.
That gross margin, over 70%, that definitely jumps out from the data shown. Suggests strong pricing power, like we talked about.
For sure. The source context also gave a current price around $141.81, with a small daily dip noted, and that 52-week range between about $86 and $153. Plus the usual volume data and charts comparing it to the S&P 500.
Standard stock info context. Okay, so that's NVIDIA according to the source.
Right. Now let's switch to Palantir. The source calls it the data analysis powerhouse.
Mm-hmm.
It describes their business as like AI software that helps wrangle and use messy data from different places. Initially, the article almost makes it sound maybe less flashy than building chips.
Maybe less immediately tangible, yeah. But the source quickly pivots to what it calls exciting results.
Like what?
It gives examples, helping the military make faster, better decisions on the battlefield.
Okay, that's impactful.
And on the commercial side, it mentions Rio Tinto, the mining company, using Palantir to solve complex data problems they thought were, impossible before.
So real-world problem solving using that disparate data.
Exactly. And the article traces their journey started mainly with government contracts, right?
Yeah, that was their initial base.
But the source emphasizes that commercial growth has really taken off recently. Companies are rushing to their artificial intelligence platform, the AIP.
Taken off.
Okay.
And growth is strong across the board.
That's what the source indicates. Double-digit revenue growth in the latest quarter for both government and commercial sides, leading to optimism fueled by strong demand.
Sounds pretty positive. But then the article introduces a catch.
It introduces what it explicitly calls the one problem with investing in Palantir right now.
Which is?
Valuation, the V word. It says the stock trades at, and this is a quote, a lofty 232 times forward earnings estimates.
Oof. 232 times forward earnings. That sounds high.
It's definitely flagged as high in the article.
Okay.
It means you're paying 232 times what analysts expect the company to earn per share next year.
But you mentioned the source adds a counterpoint straight away.
It does, yeah. Right after dropping that number, the article says, hang on, that 232 multiple only looks at next year's earnings.
So it doesn't capture the longer-term picture.
Exactly. It doesn't factor in the, longer-term growth potential beyond just 12 months. So it flags the valuation as a near-term issue, but nudges you to think further out.
That's a critical distinction the source makes. Okay, and like Nvidia, the article provides some key data for Palantir, too.
The snapshot for comparison.
Market cap listed at $324 billion. So big, but much smaller than Nvidia.
Big difference in scale there, yeah.
Gross margin, though, is higher than Nvidia's in the data shown, at 80.01%. And dividend yield is NA no dividend currently.
That higher gross margin is interesting, isn't it? Maybe reflects the software versus hardware model difference the source data highlights.
Could be. The price point mentioned in the context was $137.52, with a slight uptick that day, and the 52-week range was wide, $21.23 up to $140. And again, the usual volume and comparison charts were included.
Got it. So we have the source's picture of both companies individually.
Right. Now for the showdown part, where the article brings in Wall Street's view according to its research.
This is where that contrast really comes into focus in the source material.
So what does it say about NVIDIA's reception on the street?
Well, according to the article, it's pretty positive. It says about 30 Wall Street firms have positive recommendations, buy or outperform ratings.
30 firms, okay.
And the average 12-month price forecast from those analysts, as cited in the article using a June 12th price, implied about a 19% potential gain.
Okay, 19% upside potential based on that average forecast. How does Palantir compare in the source's analysis?
Very differently. The article states that 9 analysts covering Palantir have neutral or even negative ratings.
9, neutral or negative.
And it specifically names only 2 firms with positive recommendations, Wedbush and Bank of America Securities.
Just 2 positives mentioned versus 30 for Nvidia. Wow.
Yeah. And the average price forecast from the analysts for Palantir, according to this article, it implies a potential decline of 25% over the next 12 months.
A 25% decline. So Nvidia average forecast plus 19%, Palantir average forecast negative 25% based on the source's numbers. That's stark.
It's a huge divergence. And the source is quite direct about the conclusion it draws from this comparison.
Which is?
It states Wall Street, based on the surveyed analysts, clearly recommends buying Nvidia over Palantir right now.
And the reason given in the source?
Primarily, it points straight back to Palantir's steep valuation. That 232 times forward earnings figure seems to be the main driver for Wall Street's caution in the short term, based on this analysis.
So valuation is the key factor dividing Wall Street's opinion, according to this article. But it doesn't quite leave it there, does it? The source adds a final bit of nuance.
It does, yeah. It wraps things up by saying, okay, based on everything discussed, NVIDIA does stand out as the better buy right now for most AI investors.
Yeah, especially if you're cautious or value-focused, it implies.
Exactly. That's the takeaway for the average or more conservative investor,
Right.
as framed by the source. But then comes the counterpoint. Aggressive investors, though, may still want to add some Palantir to their holdings.
Okay, so why would an aggressive investor still consider Palantir, according to the article's reasoning?
Well, the source circles back to Palantir's fundamental story that it laid out earlier.
The growth, the demand.
Right. It highlights that earnings are rising, demand for the AIP platform is strong, the AI market itself is booming.
Yeah.
And the source suggests all this may create the recipe for a long-term win for Palantir shareholders, even those who buy at today's price.
Okay. So the article is basically saying, yes, the valuation looks scary now, and Wall Street reflects that short-term concern.
Exactly. But for someone willing to look past that, maybe with a longer time horizon and, frankly, a higher tolerance for risk.
The long-term growth potential driven by strong fundamentals could pay off, even from this high starting price. That's the potential opportunity the source highlights for that aggressive investor profile.
That seems to be the nuance the article is conveying. It's acknowledging that tension between the current sticker shock and the potential future trajectory.
Fascinating stuff. So that's our deep dive into this specific source material comparing NVIDIA and Palantir.
Yeah, 2 really strong AI companies presented, both riding that wave.
But with Very different current valuations leading to starkly different short-term Wall Street recommendations, according to this article?
It really boils down to how you weigh that current price tag against the potential long-term growth story in a red-hot market like AI. The source lays out both sides of that argument.
Definitely. It leaves you with a question, doesn't it? Based only on what this source material outlined.
Hmm.
Given it shows the risk in Palantir's current valuation, but also the potential for big long-term gains because of its growth in market.
Yeah.
How do you think about balancing that? Weighing today's price against tomorrow's potential in these fast-moving tech sectors?
That's the million-dollar question, isn't it? Or maybe the trillion-dollar question in NVIDIA's case. Something for you, the listener, to definitely mull over based on this analysis.